The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the wonderful Wednesday, the January 29th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Okay, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in. We've got call-ahead seating here, 877-927-6648. If you can't call in, go ahead and send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got a mixed bag out here. You've got the Dow up 110 points, trading out of 28,832. S&P up 9. NASDAQ 100 up 27. And you've got the Russell and the semis trading lower. The Russell down by 4. The semis down by 1.5%, 28 points to the downside. New York Stock Exchange, Wilshire, Transports, the NASDAQ Composite there, all moving topside. Spot Volatility Index headed lower. We're going to check to see where it's trading in relationship to its 50-day exponential moving average. That'll be very important out here. It's trading right now at 1571. Gold's flat. Silver is basically flat. Light sweet crude is up 28 cents. Natural gas lower again. T-bonds up 19 ticks as we speak. Leading the charge dollar-wise, the upside, it's MicroStrategy, a little over 9%. That's up 13 bucks. Norfolk Southern up 11, almost 6%. Amazon 10, that's 0.5%. Shopify 2% or 10 points to the upside. Booking Holdings leading things downward, 17 bucks, less than 1%. Silicon Laboratories down 11 bucks, 13 buckaroonies. That's clearly must be putting some pressure inside the semis. What else you got? Huntington Ingalls Industries down 4% or 11 bucks out there. Let's see. Is there a question? SR, now that the ES bounces failed at Apogee, Perigee, selling dead ahead. So we've got a new lunar phase that comes in today, don't we, John? I think it's like around 5:30, I believe. So I haven't looked, but I thought it was this afternoon out here. So, you know, what John is asking, he's asking a question with regard to the ES Mini. We'll take a look at that. We'll start with the ES Mini. And what he's bringing up, it's one of the tools that I developed many years ago, and it is a part of the celestial beings, the lunar strategy, and so forth out here. And so right now what we've got is perigee. That perigee is when the moon is closest to the Earth during the lunar cycle, which began back on January 13th. So I believe we have it coming in today, if I'm not mistaken. I see you're posting something. No, you've got, but okay. I'll have to go back and look at my time frame, and I'll do that when because I know that sometimes what they post in the and websites and so forth, John, is different than what actually came from the New American Ephemeris, which is really all the data that I use, and I kind of use that as the Bible. But what John is referring to here is when that lunar phase happens, there's not a swing point. It's just a point in time, like to the exact minute. Is how I mark things out here. And oddly enough, it can act as a key level of support or resistance. So John is saying, hey, look, if you take a look at the ES Mini, where it's run out of steam several times, really all the way since about, what is this? That bar is 2,200 hours on the 28th. That was yesterday. And then you can see several other tests of that area. So you explain to me why 3290 okay, which is the perigee pivot point, for that exact time of when it came in for the ES Mini. You explained to me why that was a resistance level. Now, these apogee and perigee pivot points, I've got them going out 300 years and forward, 300 years backward out there. But to answer your question, because I believe there is a new phase that is coming in this evening, then, okay, so you've got it at 429, so I think we're right around the same time. Then I'm not as apt to go ahead and use that as, not that it's not generating that signal to us, but I wouldn't rely on this entirely, just knowing that we've got another one just a few hours away out there. So that's how we take it. But let's continue taking a look at the ES Mini out here, and really the S&P 500, right? So let's just try to put all that together. So let's do the melding compilation of the S&P and the ES Mini, because there's levels of support and resistance that we want to identify. So here's what we know about the S&P. And you'll see in the S&P 500, it topped with a TD setup 9 count. And let me just get my crosshair, my cursor out there. That was on the trading session of January 22nd. And then what we saw take place is we saw price push down lower on Monday. We saw that gap to the downside. And what happened was the S&P closed below its breakout level. Now, the breakout level, that's using that TD setup 9 count, was 3260.86. When you break through a breakout level, now this is where Steve, and you can see here we haven't seen the ES. This is the S&P 500. We haven't seen the S&P 500 really close below a breakout level, well, for quite some time. At least all of these that I've got. So that was an indication of a change in trend. Now, the problem is you like to see follow through on the next session, or I certainly like to see it, and there was no follow through yesterday. So we have a valid topping pattern out here. That TD9 count still in place out here. And but we have the S&P 500 still holding support. So we're really sort of in a neutral position. If you're asking me where would be the best place to sell into this market, to the extent you believe or that the market is going to continue to move lower, even though it's held support, one level would be looking at Stevie's red line. That would be about the 3316 area inside the S&P 500. Couldn't bust it down. No reason why price shouldn't try to bust it up. But bust it up means we need to identify where resistance is. So on the cash indice, it's at 3316. It's a slightly different inside the ES Mini out there. Well, what else? So we're saying, or I'm suggesting that so the market's got a valid topping pattern, but support is held. So there's been no bust out of support. Otherwise, I would say there's a change in trend. Now, is the market or the S&P going to be able to get its way all the way up to that Stevie's green line? I don't know the answer to that, but there should be a struggle. Why would there be a struggle, Steve-O? Don't you like how I just talked to myself? I've got to have a conversation with somebody. Well, the reason why there could be a struggle is because the market breadth for the daily time frame is bearish now. There was a bearish crossover. Now, what that means is there's more individual instruments, constituents, trading below the bottom of the box. That's 197 from a daily time frame versus those trading above the top, which is 135. So this, and you can see, these signals that we do get periods of time where we get a little bit of consolidation stuff. You can, if you're watching on Tiger TV, you can see where my cursor's at out here. But right now, the daily says change in trend. The other time frames, though, like the 1 hour right now, geez, it's back in bullish hands. I know. You're looking to Steve-O for one consistent, concise message out here. Well, different time frames have different messages. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's go back to the S&P, the ES Mini. We're trying to figure out what the message of the markets are. At this stage, just to recap out here, we've got valid topping pattern inside the S&P 500. However, we do not have a actual breakout or breakthrough or bust through of support, which in the S&P 500 use 3260.86 out there. Now, we're saying that resistance is Stevie's green line. That's in the 3316 area, and that would be the ideal place to sell into the market if one of the places. We're not sure that the S&P will be able to get up there because we took a look at its market breadth, and its market breadth was bearish out there. Now, the NDX 100, as long as we're here, not to confuse anyone, but just as long as I've got the chart handy, you'll also see that the NDX 100 for its daily time frame also has that bearish structure. So right now you've got 27 issues trading above the top of its profiles and 36 below the bottom. So, and we see this. So, in other words, the markets are fairly brittle. Not that they can't be held up for a while, but right now we've got indications of change in trend, certainly with regard to market breadth out here. We don't have it on the other charts. So now let's go take a look at the, what do we want to take a look at next? Let's go take a look at the ES Mini, because there are some new updates here. Let's see if they're in effect, though. Here's our 4 quadrants. You're going to notice, or you may notice, I'm just going to try to update this just to make sure out here. So the ES Mini, even the NQ, let me just hit that. Yep. So the ES Mini, the NQ, the Dow, Russell 2000, each trying to form new profiles out here. Now it's weekly inside. So let's go take a look at the dailies. Let me just switch over to this chart here. This should populate it. It's going to be a little bit easier for you to see. So here's the ES Mini. Upper left hand, and let me just do it. Here's all 4 contracts, but I'll just expand this out, make it a little bit easier, less confusing. So take a look at the new profile that's attempting to form. Now I'm using Stevie's advanced tool out here. So this says that these numbers could change. The profile could just simply vanish. It's been in place since about 5 o'clock this morning and still present. And the important thing here is that this profile has formed above price. Doesn't happen often. We've taken a look at this before. It's actually a bearish sign. That is, it remains a bearish sign unless price actually gets back inside that box. So right now, the bottom of that box is 3306. So 3306 becomes a resistance level out there. Now, that may be different than, let's go take a look at the ES Mini. Let's go look at, see where on the ES Mini, it's oscillator and change line, Stevie's green line. Let's go see where that is. So let's pull that over here. So you got 3306, and then you've got 3316. So I would say at this stage, and here you can see this top, the ES Mini top with wave number 7, or letter G out there. The only support level that we saw price breakthrough was the bottom of that daily profile. Its TD 9-count breakout level would require a close below 3181. So the ES Mini is still absolutely and still in bullish mode. It just has a topping signal where price did come down, test support or a level of support, the bottom of its profile, and that didn't hold, and now price is trading with inside the box. And maybe John, maybe everyone else out there, price is going to head up to the top of that profile, 3306, or maybe Stevie's green line in that 3316 level. That would be the more ideal place to be able to sell into the market than right here at this very moment, unless we could see something going on a short-term time frame. The short-term time frame for us, for the most part, would be the 30-minute chart. And so if we go ahead and we pull the 30-minute time frame chart out here, we are going to see, we can understand why price has kind of been muted, has kind of stopped, why we haven't seen much of an advance out here. And that is, look, when instruments top or bottom, one of the patterns, the pattern you love to see is these Rhodes momentum indicator patterns out there. They're very helpful. And then you want to be able to understand where is support or resistance, depending on which side of the trade it is that you are on out here. And you really need to see those breaks of support on the way down. These are topping patterns that we're looking at right now out here that have contained price. But right now you've got a new profile that's formed, and support would be 3274 and resistance would be 3291 out there. So there's not any clear, in my opinion, on the 30-minute time frame chart, there's not any clear signal that price is ready to give way to the downside, nor is there a signal that price is ready to break out to the upside out here. But yesterday's action was important. So how would we summarize the S&P 500? Again, I'm suggesting it is more neutral at this stage, truly neutral. And if it's neutral right now during this move, then you want to give yourself the best advantage, and we believe that maybe this top has a little bit more room to run, then you'd want to try to sell at the resistance level if price can get up there, or see some other important pattern on a short-term time frame. Now, if in fact we see the highs get taken out, so the high of the S&P 500, the high of the ES Mini, these topping patterns will have failed, and that's going to suggest that prices are breaking out to the upside out here. So what's kind of nice about the potential of a short trade, especially if price can get up in that 3306, 3316 area, is that you're not having to give it a lot of room. Because any close above the high out here, the high that I'm referring to now, it would be, oh, maybe that wasn't wave number 7 because we had a higher high. Is that, hold on a second here. Let me see here. Did Stevie screw up? No, I didn't. It still was, the high was that, was where we were talking about. But the level I would, so it's really going to be that high. And you're trying to get me to tell you what that high is. I'm trying to do it. What the heck is going on here? I'll try it one more time. There we go. So that would be 3370.50 out there. Okay, I don't mean to be boring. Hopefully I'm not boring, but hopefully I'm giving you some good, solid information. So should we be, let's try to continue to answer the question. Should we be looking to the short side out here? Or was yesterday really the buy the dip and we should only be thinking to the long side? Well, we saw the market breadth on the daily time frames out there and that should offer caution to the upside. If we take a look at the New York Stock Exchange, a couple days ago on Monday, you and I were talking about how this thing in just 2 days had gotten to extreme oversold. Extreme oversold is when that advanced decline oscillator gets to the minus 150 level. Now the closing was below minus 150. And what we typically see take place then is some kind of bounce. Now it could be a bottom as well. Bottoms are better formed where you end up with this rising bottoms advanced decline oscillator. All right, so bottoms are best formed, and then you have prices moving lower. So you'd have a non-confirmation out there with that move lower, and those will produce real nice bottoms. So right now, this could be it could be a bottom, but right now we're going to treat this as a counter trend rally in light of two things. One, this oscillator is below zero, so that's the line. That is the 50-yard line, and the assumption is if you can cross the 50. Okay, if you're on offense and you can cross the 50, now that you've got the advantage, you should be able to push it to the goal line. The goal line would be, let's just say, the plus 150 level out there. And if you're on defense and you're pushing them back, you're trying to push them all the way back to their goal line, and that would be the minus 150 area. Best analogy that I come up. Now, in taking a look at this, so Market Breadth is telling you and I right now that it's in the hands of sellers. The S&P, the NASDAQ 100, and the New York Stock Exchange. What's the spot volatility index telling us? Well, we said we go see where it's trading in relationship to its 50-day exponential moving average. Well, that's easy. 50-day is 1372. It's trading at 1554. That also tells us the market is still in the hands of sellers. So caveat emptor, or something like that. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage at TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So one of our denners, Mr. Bill in the den, asked if I would go ahead and create this chart. This chart here that you're looking at right now, the top of it is the S&P 500, and the bottom of it is the ratio between two of the sectors within inside the S&P 500, the XLY, the XLP. So you got your consumer discretionary sector against your consumer staples sector out here, and these are, we're looking at a weekly time frame. And so what Mr. Bill was trying to do for everybody in the den is take a look at an old tool out there to really help confirm or non-confirm, what's going on in the market. So here's how you use it. Here's how I would use this tool. What you're looking for here are divergences. So again, the top. Let me just expand let me make this kind of 50-50, so to speak, as far as space out here. There we go. Okay, so the top half is the S&P 500. Now, we're weekly chart, and we're going back into the 1999-2000 timeframe out here. So just go from left to right. And what you can see out here is that because these are line charts, we're looking at closing basis out here. But we can see on a closing basis, the S&P 500 on a weekly basis was in essence trading flat, not making higher highs between March of 2000 until the top out there in September of 2000. So there we've got a horizontal line. Yet this ratio, what we were seeing here was the ratio was moving lower out here. So that was giving us a signal that there were problems, underlying problems in the market, and using this tool. If we take a look at the 2007 top, you saw the same thing take place. On the closing base, we actually saw higher highs forming. Yet what we were seeing in the XLY-XLP ratio, we were seeing lower highs form. Likewise, at the bottom in 2009, what we were seeing prices move lower, but we were seeing this ratio move higher out there, making higher lows. So there was your divergence. Now let's take a look at the bear market of 2018, what was taking place. Well, the S&P 500 on a closing base was making higher highs, but we were doing the same thing. In this case here, we were not making higher highs. We were just really flat across on that ratio, just really flat across that time period. So that foretold of a correction, right, of sorts. And now if we take a look at it, we've got a gigantic divergence, so to speak, out here. So we'll just say, Mr. Bill, thank you. Now, how do we use this from a timing standpoint? We really can't, or I don't know how to use it as a timing standpoint. It's a indicator like market breadth, but it's very helpful. It's very helpful to maybe use as part of your strategy for what the message of the markets might be. So, Mr. Bill, thanks for asking to put this together and being able to post that up so that everybody could take a look at it. Let me go ahead and take a look, see if there's any requests out here. I don't see anything yet. So everybody must be good with just make sure here. Yeah, everybody must be good with just simply surfing around the world. Let me show you some of the new tools that I've been working for, in case you're considering or ever considering subscribing to Mastering Probability. And so one of them is 2020. Hopefully, is all about being able to use these tools that I have, that we use out here, each of us at TFNN, and be able to really. The idea is not to buy, sell high, buy low. That's the most BS. Before Steve shared with you this information, that's the most BS thing out there, because I can show you charts where products are where they're moving lower. So how do you buy low? You don't want to do that. We don't want to do that. Instead, what you and I want to do is we want to buy bottoms and sell tops. So that's why we put all this emphasis, or I put all this emphasis on taking a look at these patterns that consistently give us signals of when a instrument may be forming a top or a bottom. Those would be the Rhodes Momentum Indicator, RMI, abbreviated on this chart. This is a scanner, by the way, that you're looking at. The TD9 counts out there. We know that the tops can form bars 8, 9, or 10. Wave number 7, those are letter G's, capital G's to the upside, lowercase g's to the downside for bottoms out there. And here is just taking a look at the indices, the index ETFs like the diamonds, the SPYs, and so forth, the sectors with inside the S&P 500, other popular ETFs that folks often call and talk about. And what's really great about this, I got SMA. No wonder it doesn't have anything. SMH would be a better thing to stick in there and let that go ahead and populate and figure things out. There we go. So I just put in the SMH and automatically came back. And for the SMH, it told me that we've got a confirmed top with the Rhodes Momentum Indicator. Our daily TD count is -2. That's really as of yesterday. Our wave count to the upside is there. Our wave count to the downside is also way out there. So that's the SMH. And then we can also go take a look at the weekly time frame. The weekly, we've got a wave 7, letter G to the upside. We know that's a topping signal. The monthly, we've got a topping signal, the Rhodes momentum indicator pattern out there. So the highlighted boxes are really where your eyes should kind of focus on as items that are potentially, or instruments that are potentially forming tops or bottoms. As an example out here, take a look at the energy sector. So what do we know about the energy sector? Well, number one, we know that it has so far has a confirmed TD9 count pattern. Confirmed because, one, you've got the little star right next to it. So just because something might have a 9 or an 8 next to it may not be confirmed. So using the structure of bar 8, 9, or the bar following 9, that has to be the high of that pattern. And yes, Tucker, the market analyzer data is included in the daily and evening newsletters. Now, I've been this year. This is the first time I'm actually showing it because I'm really close to getting the automated wave count down pat. So I'm actually comfortable now showing it because the information is by and far, for the most part, correct. It's just a matter of now I'm working with being able to get these things to update on the current bar, which can be a little complicated, but I'll get there. But for the most part, like if you take a look at resistance, if you want to understand where the oscillator and change line support or resistance is, you can clearly see on the daily part. So it's going to say resistance. What does that mean? We know that price is below the oscillator and change line. And the resistance, for example, in NASDAQ Composite is 93.91 if you look all the way up top. Now, you'll see there's a little arrow, maybe hard to see, but there's a little arrow to the upside. That arrow to the upside is telling us that Stevie's green line is green instead of red. That has a meaning because when you, the most bullish of conditions, well, would be when you're above all resistance. That would be the top of a box. That would be above Stevie's green line out there. That would be above any TD9 count top out there. So that green line, so that little arrow is really helpful. And you've got it for the daily time frame, the weekly. If you're looking for support levels, you don't see a whole lot of support on the daily time frames out here. Mostly there is support right here in the real estate sector. So if you take a look at the real estate sector, XLRE, it now has a topping signal. So it's got a topping signal out there, that little, and it's got a little pink shade, so you know. It's also got a TD9 count. It's got a TD9 count. You've got the number 1 and a star after it. So there's another topping signal. Got a topping signal on the weekly, right? And so for those of you that might be long the XLRE, now is absolutely the time to be cautious, or maybe go ahead and get rid of that instrument. We come back from this break. We're going to go talk to Brent. We're going to take a look at ticker symbol MYL. We just punch that up here. Let's see what we see. Does it show us any topping or bottoming signals? It shows a top signal on the daily, something on the weekly. We're going to go talk to Brent when we get back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 159, S&P 13. Let's go out to Brent in Martinez, California. Brent, thanks for holding. Thanks for calling. How are you doing this morning?
I'm doing just great, Steve. I appreciate you taking the call. How about yourself? How are you doing?
Doing well. You're in California, and so even though you're up in near the San Francisco area, Sunday had to just simply be a horrible day.
Yes. We just, although I have to say it's a pretty good place to be living and just a lot of things to be grateful for in this area. And
yeah, actually, I was kind of referring to Kobe's crash and everything. And was that on Sunday?
Oh, yeah. And that was down in, I think, Southern California is where it happened. But it's, anytime, that something like that happens out of the blue. I do have a quick story I could relate just real quick. That
absolutely, go ahead.
On my 50th birthday, I've always been into fishing, and my wife for my 50th birthday kind of surprised me with a trip to Canada that my brother helped kind of put together.
Cool.
And so it's a pretty involved deal to get there. So you have to fly into this area called Saskatoon, which is in Saskatchewan area of Canada, and then you have to drive for about 6 hours, about 3 of it on a dirt road, and then when you get to there, you still have to take a float plane into where the lodge is and everything. But the fishing's great, and you have these Cree Indian guides that are take you out and you go fishing with. But what happened is we went in and got into the place, and we were fishing, and we noticed that the float plane wasn't around for like a couple of days, or kind of just was a little odd. I was wondering what was happening.
Yeah.
We come to find out that the next time they took that plane, the thing crashed and everybody on board died.
Oh, man.
It was, and I don't think it probably would have been that way for us. It was a little different spot where they had flown into. There's another smaller lake that they take people into it's like almost camp there.
Yes.
And you don't have the lodge with the cabins and everything. And I think what happened is when the person was coming out of there,
yes,
they had like some kind of a wind shear or something, and they just didn't have enough time to recover.
Sure.
As where the lake that we were on was big enough that you probably would still have had time to, be able to gather it up and maybe, come out of it. But in this case, it was not enough room to make that happen. But it was just. And, of course, I didn't want to say anything to my wife about what had happened or, freak anybody out. But it was just kind of makes you think about things when, something like that happens right after you So we're basically the last ones on that plane that before the thing crashed.
Sure. No doubt. I mean, those things, what they do, I mean, those events, if we talk about how things can happen for us, certainly I can kind of consider this something happening, for you. But part of that, what I mean, or where I'm going with that is just simply what you had said earlier, which is the gratitude piece of it, and so. Look, I don't understand. Well, I've flown like yourself in all kinds of small planes, helicopters, the whole thing. And, what I don't like doing is flying in bad weather, especially even in a smaller type plane or what have you. It doesn't matter. But, you just try to eliminate some of the issues out there. Hey, next time we want to know two things, but we'll get into Milan out here. But the next time or maybe you guys did have the song running while you guys were flying in there. But the Guess Who, one of my favorite bands. They're from Canada, and I remember they did a song called "Running Back to Saskatoon." So the next time you go up there, you got to get that thing blaring out there because you'd be running. And so, what we really want to know is what'd you catch?
Oh, a bunch of pike. Yeah, it's funny. They call it the tune. Is that what they call Saskatoon up there?
Yeah.
It's a funny little town. It's a great time. And like I said, we have these guides that take you out. And I don't generally do that when I go fishing. It's just my brother and I, and it's kind of low key. And that's the one trip that we kind of is a little more extravagant. And
sure.
And it's still kind of rugged where the place that you're at, but at least you have somebody unhooking all your fish for you. It's like they do a shore lunch and all this stuff. It's pretty nice.
I would think so. So as a young kid, my father and I used to go fishing all the time, and I grew up in Michigan, and he used to take me to a place in northern Michigan. It was called Fletcher's Floodwaters. And actually, it was just like it sounds. It was an area that was flooded. The first time I'm up there, Brent, just as a young kid, we're in the boat. Now, when you're in your boat, you're literally running in, tree. You might be at the bottom of your boat, might be hitting a tree or something, a log or what have you. But it's great for walleye and pike fishing, which is a great, typically is really a good struggle, a good fight out there. But there's also some type of Air Force base out near that area. It happened to be a fairly foggy morning, and the next thing you know, I'm just a kid. We're out there fishing, and it's cold, and I'm hearing the sound of these engines coming in, and it was a plane that was landing, but you really couldn't see it until it was like right over your head. It was so loud because it was a big prop plane back then. But anyways, pike fishing is absolutely great. But let's do this for our listeners out there. They're not really interested in probably hearing our fishing stories. Although I have found that as we get older, the fish that got away keeps getting bigger and bigger.
Yeah, of course. Yeah.
Exactly. But so we want to take a look at Myland. MYL is the ticker symbol. Is that correct?
Yeah, I've talked to you about this in the past. I'm in at like the mid-17s, and as you were going into that break, you kind of alluded to what I was going to ask you about, if you see any kind of topping action there potentially.
So on the daily time frame chart, today's move, it's today's spike up higher that has triggered the potential of a Rhodes momentum indicator signal. So it's present, and as you know, you need to see some type of bearish reversal candle. Now, it would be possible if this sells, if this closes lower today and maybe around 19.99, somewhere around there. This could form a shooting star candle. Right now, it's not. It has too large of a body for that to occur. But there's the potential for it. If you did see today become a shooting star, and if you did see follow through tomorrow, what it would signal to us, is that price would go down and at least test support. It could be the end of the move or some type of retracement. Now, support on this is going to be 2101. 2056, 1989 on the daily time frame, because those are your market profiles. Below 1989, then you're looking at a move back to about 1723. So you do have that topping signal on the daily. On the weekly, if we pull this over, it looks like this is going to be bar number 9 of a TD9 count out here. So again, we don't know whether this will be the top. It could be next week where this pattern can form a high on bars 8, 9, or 10. So it could be next week. But you've got two patterns. I would use the daily time frame as your signal that might trigger something on the weekly. And on the monthly time frame, we've got a nice bottom, and it's all the reasons to be in here at this stage. You had TD set up 9 count bottom. and prices above my oscillator and change line. So it's got potential signals for a top. I would really keep an eye on the daily as that first potential trigger. All right.
Okay, yeah, that sounds great. I was just going to mention my brother's a pilot. He used to do a little bit of aerobatics and stuff, but he got to fly that float plane one of the other trips we were up there, and that was pretty fun for him to get to do that. But again, as always, Steve, appreciate it so much, and just have a great day. And if I don't talk before the weekend, have a great weekend.
Thank you, Brent. You too. That was Brent in Martinez, California. Steve Rhodes with TFNN. We'll be right back, and we're going to take a look at JD.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Answer a question here in the den with regard to my scanner market analyzer tool out here coming from Bill. And Bill's asking, am I able to automate the scanner for stocks as well? And so here's an example, Bill, of the Dow 30 stocks. Again, showing your daily, your weekly, and your monthly time frames. And the whole purpose of developing this tool eventually is going to be, and I've got 3 different computers that are running, really 2 computers that are running it, and my laptop. But the whole purpose of this is to be able to scan, in essence, all the stocks for multiple time frames, looking for tops and bottoms out there. Just looking for wave number 7, letter G's, looking for TD9 counts, looking for Rhodes momentum indicator, and therefore subscribers and myself will really focus on that. It's nice to know where an instrument is at, here, but really the whole objective is to be able to find patterns, that are present at bottoms or present at tops out there, and in essence be able to select from that pool of instruments that somebody might want to invest in addition to the ETFs and so on and so forth. But there was a request inside, somebody requested, I think it was Ron, had requested take a look at JD. And if we take a look at it, no request for anything specific. Here's what we know. This did form a Rhodes Momentum Indicator top. It did it just coincidental that Brent and I were talking about myelin and the potential for it to form a shooting star. We don't know if it will or won't, but that is exactly how JD on its daily time frame topped, shooting star out there. And then what price did, in essence, it got back towards support being the breakout level of 35.90. So, Ron, support is held. At this stage, you can't bust them down. You're inside a bullish structured profile. Chances are price inside JD is headed to the 40.35, 40.62 level. That's what the daily time frame suggests to you and I. The weekly time frame doesn't show any kind of a top of significance out here. Stevie's green line was tested and it held. And the monthly time frame suggests that JD is targeting 45.23. It's TD9 breakdown area. Folks, thanks so much for joining me. Stay tuned. 2 great hours of programming are left. My favorite polar bear, he's up next. And my favorite Obi-Wan Kenobi, Tom O'Brien. He'll be back at 3 o'clock. So have a wonderful Wednesday, and I look forward to seeing you tomorrow. Take care.